What is private income? Private income is the factor income and transfer income received by the household and firms within the country and outside the country. So, factor income plus transfer income inside the country. What is factor income actually? It is a domestic income or NDP at factor cost, which consists of income accruing to private sector and government sector. But we are calculating private income, which is one of the subdivisions of national income. And private income, by the term itself, it is clear that it does not include the income of the public sector or government sector. So we are taking into account the income accruing to private sector. So from domestic income, NDP at factor cost, which consists of income accruing to private sector and government sector, we have to subtract the income accruing to government sector. It is not included in private income. So factor income, that is received by the private sector, plus transfer income received by the household and the firms. So factor income received by the household and firms plus transfer income received by the household and the firms. What is transfer income? What is meant by current transfers? Current transfers refer to transfers made out of the current income of the payer and added to the current income of the recipient. That is in the form of gift, donation and other financial help. It is unearned income. Factor income is earned income in the form of rent, wages, interest, profit. But transfer income is one-sided. It is not earned income. It is in the form of gift, donation. So transfer income includes current transfers from government administrative department, current transfers from rest of the world and national debt interest. So current transfers which the household and firm receive from government in the form of gift, donation, and the current transfers from abroad, that is rest of the world, and national debt interest, that is interest paid by the government for the loans taken from the private firms, that is a part of income of private sector. So inside the country, factor income plus transfer income. Outside the country, it is in the form of net factor income from abroad. So net factor income from abroad is the difference between income received from abroad and income paid to abroad. So always we have to keep in mind income paid to abroad is to be deducted. Income received from abroad is to be added. So private income thus is the current income earned from all the sources of private sector consisting of private enterprises and factor owners or household means received by the private firms and household within the domestic territory of a country and abroad. Or we can mention it this way, private income is the factor income in the form of rent, wages, interest and profit, and transfer income in the form of gift and donation received by the household and firm within the country and outside the country. So, factor income, that is domestic income or NDP at factor cost, consists of the income of private sector and the government sector. But here we have to deduct the income received by the government sector. So, once we add the factor income and transfer income received by household and firm, to that we have to add transfer income. Whatever current transfers received by the private sector from government, from abroad, and then as a part of current transfer we have to add interest on public debt, that is the interest paid by the government for taking loans from the private sector. So we can calculate it in three ways. That is private income, we can calculate if national income is given, how will we calculate private income? If personal income is given, how will we calculate private income? And if domestic income is given, what is the method? We are going to see it one by one. If national income is given, NNP at factor cost, I have already uploaded the notes in a previous module. The link will be given below. All these concepts, NFIA, NNP at factor cost, current transfers, capital transfers, all the concepts are explained in the previous modules. Kindly refer it. So national income, NNP at factor cost, net national product at factor cost minus income accruing to government, because national income includes the income of the private sector and the government sector. As we are calculating private income, we have to deduct income accruing to government, income from property and entrepreneurship, that is rent, then interest, profit, all these are to be belonging to government, they are to be deducted. And also we have to subtract saving of non-departmental enterprises. Non-departmental enterprises are also government organizations with the autonomy. And so we have to subtract the income of income accruing to government, and we have to subtract the saving of non-departmental enterprises. Non-departmental enterprises, example HMT. Then we have to add current transfers and interest on national debt. If domestic income is given, we know that domestic income does not include NFIA, but we have to add NFIA to private income. So that is the only difference if we are calculating from NNP at factor cost and NDP at factor cost. NDP at factor cost is domestic income. So the same method, the only difference is that we have to add NFIA. While we are calculating from national income, NNP at factor cost, there is no need to add NFIA, because national income already it includes NFIA. So domestic income minus income from property and entrepreneurship accruing to government minus saving of non-departmental enterprises plus interest on national debt plus current transfers plus NFIA. So the only difference, we have to add NFIA. What is the third method? Third method is private income is equal to personal income plus corporate tax plus undistributed profit. What is personal income? Personal income is the income received by the household. It does not include the income received by the firms. So personal income. To that we have to add corporate tax. That is a tax paid by the private firms to government. So before paying the tax, this income is a part of private income. So personal income plus corporate tax plus undistributed profit. This term also I have already explained. Undistributed profit is the net retained earnings of private sector, the amount which is not distributed among the shareholders. It is kept for future use. So which are the three methods? NDP at factor cost or domestic income minus income accruing to government minus savings of non-departmental enterprises plus interest on national debt plus current transfers plus NFIA. If NNP at factor cost is given, same method, there we need not add NFIA. Private income, the third method is, or the next method is the personal income plus corporate tax plus undistributed profit. So these are the three ways of measuring private income. So next we are going to see what is the difference between income accruing to private sector and private income. So what is the difference between income from domestic product accruing to private sector and private income? When we deduct income from domestic product accruing to government, that is from domestic income, NDP at factor cost, when we deduct the income from domestic product accruing to government or public sector, we get the income accruing to private sector. But in order to get private income, we have to add the current transfers or transfer income, the interest on national debt, the current transfers from government, current transfers from rest of the world, that is to be added in order to get private income.